The big news that has come in is that SEBI, our capital markets regulator, has issued an interim order against Jane Street. Now, SEBI has also seized a 4,843 odd crore rupees in all unlawful gains from the Indian stock markets from the company. Entities linked to Jane Street case have actually been barred now from participating in the securities markets, and banks have been instructed to freeze the accounts and prevent any debit transactions by individual or entities under investigation as well. That's the big news that we are tracking today. Now, what has really happened? I'd like to explain to all our viewers here what we are given to understand and what SEBI has really found in this case. Between January of 2023 and March of 2025, global trading giant Jane Street Group allegedly exploited India's derivatives market with high-frequency strategy that SEBI now is calling manipulative and unlawful. The firm's profits in these trades are to the tune of 4,843 odd crore rupees that SEBI is impounding right now. Now, this is just a part of the entire 43,289 odd crore rupees it had reportedly made in India during the period as well. So this is the only amount that SEBI has impounded is 4,843 odd crore rupees. Only a part of the entire profits that they made that were to the tune of 43,289 odd crore rupees. Now, what has happened and what did Jane Street really do? Remember, Jane Street's operations in India were spread in three foreign portfolio investors: Jane Street Asia Trading Limited, Jane Street India Trading Private Limited, and Jane Street Asia LLC. On paper, these were separate legal entities. But SEBI's investigation concluded that these acted as a single group under the common control, executing synchronized trades with near perfect coordination. And that's how SEBI says that these people have made unlawful gains in the Indian stock markets. Now, SEBI has found that these entities routinely took opposite positions in the index derivatives, especially in the Nifty Bank and the bank futures and options. On Jane Street entity, one of these Jane Street entities of these three would buy, the other would sell, and the same contract at the same price at the same time. So it was perfectly in coordination, synchronized, using different strategies in the stock markets, maybe taking a buy position in the cash market and taking a sell position in the F&O market on the same index as well. And all of this would happen on the same day at the same price. And that's how, by taking different positions, they have managed to gain unlawful gains, is what SEBI has talked about in their interim order. Remember, this is an interim order, not a final order. Of course, Jane Street will, this entire situation will get into the legal proceedings now. What Jane Street is constantly marked out from itself is that making profits in Indian stock markets is not illegal, and taking opposite positions also in the markets is not defined as illegal. But remains to be seen in this entire case how SEBI manages to prove that there has been an illegal kind of an aspect or an intention with which Jane Street has operated in the Indian stock markets. Now, remember, there were huge volumes in which these trades were being taken place in by Jane Street. Remains to be seen whether there will be an implication on the market volumes and market volatility as well because of the absence, because they have been now barred from participating in the Indian stock markets, at least till the interim or the legality processes are complete right here. So that's something that will be a larger story that we will be tracking throughout the course of the day. Of course, we will be getting to you top market experts to explain to you what has happened, how it has happened, and what will be the implications of all of that as well. Let's quickly look at how the markets have started to trade in the pre-open. On the back foot, 25,300, about 100 points lower in trade. That's what we are given to understand at this point in time, 0.4% lower as a reaction, and we will of course see how things pan out. Let's also pull up Nifty Bank for all our viewers to see. Remember, Jane Street, as we are talking about, has largely dealt with Nifty Bank and the bank futures and options, and has not really dealt too much with Nifty. 1.13% of a loss in the last 1 week. But let's pull up today's move also on the Nifty Bank to see. Remember, we had been celebrating Nifty Bank at record high levels over the last few days. And of course, this will be important one to track. Let's quickly welcome Kush Kodasara, Managing Partner of Invest Value, as he joins in on the program with us to help us understand how to read up the situation. Kush, usually we start off with your market view and we talk about what's happening around the globe. But today, the big story is about Jane Street and how it managed to benefit quite a bit by taking opposite positions in the markets. Now, SEBI has come out with the interim order, of course, barring these entities from participating in the markets, impounding their accounts with about 4,843 odd crore rupees of profits that SEBI marks that they have been making illegally and unlawfully. But of course, legal proceedings aside, I want to understand as a market participant, what kind of an impact do you see of, an agency like this? And this will not be just one agency. There'll be so many more that will be operating, like this in the Indian markets as well. So how should a retail investor really read into this?
Definitely, I think this news is a little bit worrisome for our traders. But for a longer term, I think retail traders should be happy that SEBI has been taking such actions. And in last 4 years, the way we all were talking about how frenzy was option trading, volumes were high, weekly options. So this was one of the reason why maybe weekly options were on Bank Nifty have been been on hold. So definitely, I think news for short term, yes, it will affect because there might be many such small companies also now they will get afraid if they are doing it unlawfully or maybe strategy is unlawful, then we will see some volatility in the markets. But on a longer term, I think SEBI since last 2 years it has been concentrating how to protect retail traders and investors, and that is positive for us as a market participant. First, it was like retail traders and investors were not interested; they were afraid of investing. But since last 2 years, the way retail participation is coming into equity markets through mutual fund or through IPOs is rising, and SEBI has been watching this, and this is the right step SEBI is taking out. I think shorter term implications would be tough, but on the long term, I'm looking at a positive way. Our market participants will get more safety. So positive for long term investors that way of getting cheated, doors are getting closed. So that is a good point.
If you like the video, do like, comment, share and subscribe.